Hello there, and my name is Nigel Lewis. I'm a property journalist, and we are here today to talk about underinsurance. Steve, what is underinsurance?
It's basically when people insure their property, whether that's a rental property or their own home, for a sum, and where people get confused is between the actual rebuilding cost and the valuation of their home. So in terms of the sum insured, it's the bricks and mortar for your property, it's surveyor's fees. If it has to be demolished, you have to include that. So what you need to make sure is you're covering all aspects of the rebuilding valuation. And then if you've got a rebuild that should be, say, 200,000, but you've decided for whatever reason, or it's historic, that you've got it for 100,000, it means you're grossly underinsured. So it's really to do with the actual cost of everything to do with that property.
And so if I was about to take out insurance on my home or my buy-to-let, why would I be needing to think about this?
The most important thing is, from an insurance perspective, they base the premium on what the correct rebuild value should be. So from their point of view, if you've not paid the correct premium, in the event of a claim, say you were 50% underinsured, and you had a claim for, say, £25,000, and they put a loss assessor on it, and the loss assessor said, well, actually, you are underinsured by 50%, the insurance company would then say, well, we're only going to pay you 50% of the claim. So on a £25,000 claim, you would only be getting £12,500 back, which would mean you've got to deal with the gap in the middle, which, for me, whether that be £1,000, £2,000, that's a lot of money. But it would be even worse if you had a total loss when you should have insured it for 200,000, and obviously that was 50% underinsured. Who could then afford the gap of 100,000 to basically get that property rebuilt? So that's where you've obviously got to be careful. On the smaller claim, yes, you might be able to get around it, but as that starts to ramp up, you could be to the stage where you can't afford to get your property rebuilt.
So there are some figures about how many people, or what percentage of the market, or number of people in the market are underinsured. Do you have any idea what that is? Is it very high?
Again, because there's so many properties on the market, what they're basically saying is on the ones where claims have come in for total losses and a full proper valuation has been done, they reckon it's nearly sort of like 90% of the market is underinsured in some way. So that may just be 2, 3, 4%, but there is cases, unfortunately, where it's as much as 50, 60%, and in some horrific cases it's been higher than that. That's based on the insurance industry, on what they've looked at on total losses. But if you think of how many millions of properties are out there, it's it could well be an even bigger number once you drill down a bit further.
The topic of underinsurance is quite complicated, isn't it? Is it fair to say that? In that you've got different factors all working on the cost of rebuilding your home or repairing your home after a fire or flood or whatever, and also there's exterior forces coming in, pushing those prices up and changing the premiums you're likely to be paying in the cover. So what can people do when they're about to take out insurance? What could they do to mitigate that?
Yeah, I think the most important thing is you need an up-to-date valuation of your property. And not to say that you need to get a valuation every year, but you need to make sure when you take out your first insurance policy that you've got the correct sums insured. Then to try and keep it on track, over the next sort of, say, 2 to 3 years, it's best to take a policy that includes what we call index linking, which goes in line with inflation for rebuilding costs, material costs, labour. So at the moment, if you look at the way the current situation of the country is, we hear this inflation figure of 10%. And then people can't understand why index linking, which has never been this high before, is nearer 18, 19%. So they're saying, well, how comes inflation's at 10%, but the rebuilding inflation is a lot higher? Well, unfortunately, and whether it's the aftermath of Brexit, where there's not the skilled labour, not enough labour, Then obviously there's been global things happen around the world, which means materials are a lot harder to get hold of. So things like cement, for example, which plays a big part in rebuilding a house, in some areas has doubled in price, and even things like plaster. I mean, there was at the sort of middle of last year, you couldn't go to a B&Q or other retailers, wholesalers, where you could actually purchase that, and you were seeing it on eBay, Amazon, where people were asking for double the price. So if you had a job that needed to be done, you've got to factor in how much that material is going to be at that particular time. And at the moment, the insurance industry is seeing on claims probably between back end of 22 to sort of back to 2020, probably an increase across the board of around about that 20% for the different factors, whether that's labour, material, transport to get it there as well.
So what we're saying here, and correct me if I'm wrong, is that you need to be quite active in looking at your house value and also keeping an eye on inflation, because the figure that's in your insurance policy document for the rebuild cost may be coming out of date. Is that a fair summary?
I think that is fair. I think in the past, normally where inflation and claims inflation and the cost of materials has stayed, I'm not saying static, but it's relative. So when you get index linking every year, it would normally in the past, probably for about 5 years, it would hold up and that figure would be quite accurate. What we're now seeing is over a 3-year period, how much that figure can change. So I do think it's right now that you do seek some sort of professional advice every 3 years, definitely every 5 years at a push. But we also understand the cost implication of that. So what you can do, there's various sites that you can go on to look at a valuation, but you would need to know the square footage of your property, factor in the bedrooms, factor in different things. At least that would give you an idea. And one of the sites is the bcis.co.uk site.
Okay.
And normally you get charged, but it will normally give you 1 or 2 for free. And if you're a homeowner, that's great. If you're a landlord, you'd probably look at certain properties that are similar, so at least it gives you an idea. But then there is other sites, and including the BCIS as well, like rebuildcostassessment.com, where you can pay for a desktop valuation, which more insurers are accepting because of the technology now involved. It's not like someone just guessing like the mortgage lenders used to do. This is someone that can drill down on your property.
Assuming you have a sort of standard property, if you got a modernist detached, you're probably going to have because there's none around it like it. But as long as you've got a sort of semi or a detached house, which is not too dissimilar, that's fair, isn't it? The valuation is going to be fairly accurate.
Yeah, the valuation will be fairly accurate. Obviously with Google Maps, you can now see if you've got a property that's got an extension, because you've obviously got to allow for the extension to be included as well. So realistically now, if you was to get that done once every 3 years and get it index linked for the following 2 years, the majority of insurance companies would see that you've tried to mitigate your loss to keep it in line. But if you just leave it running, year after year after year with just the index linking, and you had a mortgage valuation done say 10 years ago, there's a good chance, especially with the way the market's been in the last 2 years, that you will be underinsured. I think that's the reason why the percentage number's gone up, especially with the rebuild values at the lower end, because people just thought, you can rebuild a house for 100,000, 200,000. Now a house that probably you could have rebuilt for 100,000, say 15, 20 years ago, it's probably nearer 250 to 300,000 rebuild value. So you can imagine if you've just let it index link, it's not going to catch up with where we are. Not to say in the future that labour costs couldn't come down, material couldn't come down, but unfortunately in the world that we're in at the moment, it just seems to be on the up.
I assume everyone watching this will be going in their mind, well, does that mean therefore premiums are going up, or do the premiums not go up that much given that the rebuild cost is?
If you're 20,000 underinsured, yes, it will make an effect on the insurance policy. but you're talking pounds, not hundreds of pounds. Yes, if it was to go up by a couple of 100,000, I mean that will have a bit more of an impact. But I think what you've got to realise is, if by increasing your rebuild, say by 50,000, the premium went up, say, I don't know, given a rough figure, say £70, £80
a year,
you've got to look at, if you had a total loss and you're underinsured, it would cost you a lot more than £70, £80. It could be costing you thousands of pounds. So when people are looking to save money on insurance and trying to cut corners, you can't cut corners with the rebuild value. What you can ask your insurance company to do, for argument's sake, is to say, well, my standard excess is £50, £100, £250, depending what type of product that you've got. Insurance companies are out there that say, well, if you increase that to £500, £1,000, the excess, which is an excess is what you pay in the event of a claim before the insurance company does, for those that are not aware of that, that can reduce your pricing. What you can't afford to do is to reduce your pricing by lowering the rebuild, because it will cost you thousands more in the long run.
Wow. So do you have customers who have underinsured and then had a catastrophic fire, flood or whatever, and come to you and say, we're short?
Yeah, unfortunately, we've had it up to sort of 20 to 30% ourselves, and it's where either people have done it historically, and in some cases where people are cash rich, where they've never had a valuation, they've bought the property, because they've got the finances and they want to rent it out, and they've compared it with another house or another. But obviously that's not correct, and unfortunately they've had to foot the bill for the extra work, and obviously at that point the insurance company obviously can't authorise the whole of the claim. They will pay you a cash settlement, but you've got to put that property back to the standard if you want to continue with the insurance.